This week's crypto recap, good and bad news for the ETF scene in crypto. MicroStrategy has bought more Bitcoin, surprise, surprise, and we touch on the top 10 tokens and coins in 2023. What are they up to? We discuss all this right now as I'm joined by research analyst Nick for today's Collective Shift weekly recap. Actionable insights, my friend, and a breakdown into the crypto market, all in under 30 minutes. Matt is away for a few weeks, guys, so you have myself and Nick covering for the podcast this week. As always, we'll start with the market update, though. Nick, take it away with the market.
Yeah, thanks. So we saw Bitcoin and Ethereum both in the week higher. Bitcoin was about 2.3%. ETH was a bit higher, closer to the 6%. And this was mainly due to an ETH futures approval that hit the US, which looks like it had real positive price action for ETH. Then we also saw the US Congress avoid a government shutdown, which was a lot of concerns sort of overarching the crypto market as well as just the broader macro market with, US, the biggest economy. There was concerns about whether they were going to agree on a new budget and new spending, essentially. So they were able to not extend the deadline too much, but sort of just kick the can down the road, agreed to push it down to November. So no doubt we'll visit this again on the podcast and we'll see whether they avoid another shutdown in November.
Yeah, that's right. I think in my lifetime, I haven't seen the government shutdown actually happen in real time, but I think it has happened a couple of times before, if I'm not wrong. And at the same time, that is crazy times when no one gets paid, but the politicians do end up getting paid themselves, which is people aren't quite happy with that. Postal workers, anyone else in the public sector do not get paid. That's really unfortunate. And that has, actually compounding effects down the line. So, Nick, thank you very much for that. As always, if something does come up like this again, we will let you know and how it may affect your crypto portfolio over at Collective Shift. But let's go on to some of the bigger news in the week today. Let's talk about the Bitcoin ETFs being delayed. Now, this, of course, is talking about the spot Bitcoin ETFs. They have been delayed. They have been delayed multiple times before, and they will probably continue to be delayed. The SEC is facing heat by the US lawmakers, let's be honest. So the SEC continues to kick the can down the road for the spot Bitcoin ETF approvals, delaying decision on both the Valkyrie, Bitwise, the Invesco, and the BlackRock ETF, which we all thought would be approved because they had a really, really high probability of actually getting approved. Now, the new deadline to actually make these decisions or further delay is now January the 10th. Now, it's not that long from now. That's only about 3 or 4 months, give or take. We've waited so long for the Bitcoin ETF. I think we can wait a couple of more months. Not to say it'll be approved at that time, but it's not that long to wait, let's be honest. So it all comes as Gary Gensler got a really, really demanding letter from 2 members of the House Financial Services Committee. They were on different sides of the party lines, right? And they sent this letter to Gary Gensler to say they want you to approve a Bitcoin spot ETF immediately. Now, that letter will have any effect. We'll have to wait until Gary Gensler comes back to the rest of the public and the community to say, yes, we're going to go ahead and do it. And when he does say that, which one are they going to be going for? My money is on the BlackRock ETF first. And that's about it for the ETF delays. But I think, Nick, you have some other ETF news, but not for Bitcoin this time. It's for Ethereum. Is that right?
Yeah, so although we had bad news with more delays for Bitcoin, we had some positive news on the futures ETF front with the Ethereum futures that got approved. So they're slated to go live this week, and we're expecting then a raft of more futures ETF applications to hit the market or possibly be approved now that we're starting to see some go through. This is sort of a landmark case, I guess, because Bitcoin, of course, we saw a futures ETF go forward first, and now they're looking at spot. So this really shows that sort of ETH is potentially being treated in the same bracket now or following a similar route as Bitcoin. So we should really start seeing, I think, the marketing hit full steam ahead, and we're going to see a lot of these competing ETH futures ETFs being marketed to the public and really hitting the market. So I'm really excited to see this. But another thing we could consider is that these have obviously been sort of a top signal in the market. We saw that for Bitcoin, whenever Bitcoin futures ETFs went ahead, we saw that was a sort of a top of the market. And so I'm wondering whether this is going to be the same for ETH. So a lot to play out here, but no doubt positive news.
Yeah, that's right. I do remember that time actually when the futures of Bitcoin came out. I think a lot of people started shorting it at the moment, and that had an influence on the price action on the spot markets as well, because they do influence each other a little bit. But yeah, it is really great news either way. The more institutional instruments we have approved, the better, the robust the system will be in its entirety. So awesome, man, Nick. Now I think you got some extra news. Let's stick on ETH for a little bit more. I think Ethereum is having some also inflationary issues. Now, I'll let you cover it, Nick. What's happening with Ethereum? Not on the ETF front, but on the native blockchain front.
Yeah, so a big focus for us, especially at Collective Shift, I know we've been watching a lot the ETH supply, and there was a lot of this mantra about ETH actually having its 1 year of being net deflationary. So this just essentially means that more ETH is being burnt, is being issued into the market. And we've seen that with lower activity on chain for Ethereum, gas prices have really dropped to, I think, even hit some single digits. It was about 12, 15. And this just means that with lower, I think, activity on the network, less ETH is being burnt and eventually more ETH is being issued into the market. So we saw a bit of an insight into what it looks like when the activity is a bit slower, and we see that ETH has been a bit, not as being burnt as much. But it really doesn't take much for activity to increase. I think it's about a 24 Gwei, which is sort of the point of which Ethereum becomes net deflationary. So more ETH is being burnt. So this is just something to watch in the market, and I'm really expecting though when activity starts to come back in massive waves, like we saw even in parts this year and last year, just how quickly the burn rate starts to catapult down. So yeah, a lot to watch on the ETH front. We also saw that there's been a lot of discussion about its next big upgrade, which is the Cancun upgrade, which essentially helps these other Ethereum networks such as Optimism or Arbitrum become much cheaper to use. So this is a really big landmark upgrade that a lot of people, and I'm especially watching, because it's going to make these networks much easier, much cheaper and faster to use. But that potentially may be delayed into 2024, according to Ethereum core devs, if they don't get some of these test nets and practice runs done before about November.
Yeah, that's right. And like I always say, this is a giant, big experiment, and it does take time for this to actually be safe for the developers to push it out into the public so that you can go ahead and transact on there. But and it's generally like these layer 2s are already pretty cheap to use, I would say. But imagine them getting even cheaper, like less than 1 cent even to transact on a layer 2 on Ethereum. That's pretty valuable. And I'm sure when it gets to that phase, a lot of people will still be able to come back to the layer 2s and use them. So it's really great news. Even though it's going to be delayed, I'm still here. We're still here at Collective Shift. We'll keep an eye on the market for you. Isn't that right, Nick?
For sure. Maybe we can also get into, I know there was some MicroStrategy news again that they keep quietly dropping any excess treasuries they have or any money back into Bitcoin.
Yeah, that's right. Again, MicroStrategy is in the news, my friends. They have bought another $147 million worth of Bitcoin. Let me go ahead and share the screen here so you can see what I'm talking about. So, of course, our CEO, Michael Saylor, he is a big proponent of Bitcoin. They continue to buy throughout the bear market. They are actually the largest single public holder of Bitcoin. They actually have about $4.68 billion worth of Bitcoin, if I'm not wrong. Now, has this affected the price? Yes, it has. MicroStrategy is up about 46% in the last 12 months. You can probably compare that to Bitcoin because people use MicroStrategy as a proxy against Bitcoin. Because let's just talk about it very generally. MicroStrategy, the company, holds Bitcoin on their balance sheet. So what happens when Bitcoin does appreciate in price? Of course, the balance sheet of the company goes up in price. And so the price is a little bit correlated to Bitcoin price, the price of MicroStrategy to Bitcoin. That's what I mean. So it's really good to see when a company continues to be, they continue to be always going. So it's good to see a company always putting their money where their mouth is and actually going out and purchasing Bitcoin and actually sticking to it. Throughout the long bear market, they've continued to purchase Bitcoin this entire time. It's really great to see, Nick. I'm just so happy that MicroStrategy and Michael Saylor still stays the course. Yeah,
I'm wondering how it goes when these ETFs get approved, because obviously you mentioned that a lot of people are using as a de facto ETF. What exactly happens then to MicroStrategy when you don't really have to buy MicroStrategy stock then to get exposure to Bitcoin then? So a lot to play out, and this is an example too of MicroStrategy using, I guess, what's called the Bitcoin standard of using their excess treasury, their excess dollars, and preferring it to put it all into BTC, as that sort of hard sort of digital asset. So, yeah, really keen to see how they go, and yeah, we'll see how they're affected by the possible and what I think is inevitable ETF announcements in the coming year.
That's right. There will definitely be ETFs, and then we'll have to see what happens to the MicroStrategy stock and their approach to the entire market. Awesome, Nick. So I want to actually head over to our big segment of the entire podcast this week. Now, I want you to set the scene, but basically we're going to be looking at the top 10 cryptos. Now, Nick, take it away, set the scene for us. What are we going to be doing?
Yeah, so this is sort of a fun little new experiment we're looking at, because one of the things I've been looking at a lot is past market cycles, and anyone can access these. If you go onto CoinMarketCap and look at the historical charts, we can see, especially in 2016, 2014, 2020, just how the top 10 has changed so much from the beginning of a cycle to the end of a cycle. So perhaps it's a really good opportunity. A lot of people may think we're on the verge of a new cycle to look at these top 10 cryptocurrencies and have a flick through the charts and just make an assessment of where they stand today and whether we think they may hold their place or whether they may struggle to stay in that top 10.
Yeah, that's right. Let's have a look at the top 10 from 2020. Of course, you have Bitcoin ETH, XRP, Tether, Bitcoin Cash, Litecoin, EOS, Binance Coin, which is now BNB, of course, BSV. I hope you remember those words, Jesus Christ. And then we have Monero, and going to 11th is Stellar. So those coins were in the top 10 in 2020. But let's actually take a look at the top 10 in today, 2023. Let's have a look at them. We have Bitcoin, Ethereum, Tether, Binance, XRP, USDC, Lido, ETH, as well as Cardano, Solana, and the DOGE. So DOGE is still there, my friends. Now, Nick, what we're going to do today, we're just going to have a look at all 10 of these. We're going to break it down very simply. We won't look at Bitcoin and ETH because, let's be honest, they control the majority of the market. Bitcoin dominance is 50% of the entire crypto market. Ethereum is about 19%. So they roughly take up 70% of the entire market. That leaves 30% of the rest of crypto for all of the other tokens. Let's look at the top 10 because they make up the majority of this. I'll let you start off first with, I think Tether is the number 3rd at the moment after Bitcoin and ETH. What's happening with Tether, Nick?
Yeah, so everyone may know Tether as the largest stablecoin in the crypto market. And this is one that has always raised a lot of controversy, and it has stayed, the top 10 throughout, the last half a decade. It's been the major stablecoin, especially in the last few years. A lot may wonder whether, I guess, USDT is kind of solvent, or there's been a lot of questions in the past about solvency. I think this has been put to bed in the last year or so, because I've actually posted record profits of about 850 million. They had another, I think, almost 1 billion profit in the first quarter of this year, essentially because as interest rates have increased, Tether does not pass on, all this interest to its USDT customers. They, hold their treasuries and they keep that profit for themselves, which they then may lend out or buy some other potential smaller cryptocurrencies or that back up Tether. So maybe in the past I would be more worried about Tether because they have not had conclusive audits done. So they've always got that risk hanging over. But for me, it would probably have to be one of the biggest bag fumbles of all time, considering how much of a money machine Tether is at the moment and whether they may have done wrong in the past, but now potentially they've stuck it out, and with their record profits, they can potentially fill any, possible issues they had and start to get compliant. Because a lot of people don't realize that Tether actually bans more addresses on chain than USDC. So they are, very compliant when they want to be. So I think one to watch, and I'd be very shocked to see Tether really start to be eclipsed totally. I think we're going to see more stable coins into the market, such as PayPal coin, and USDC should only grow. But surely there's a market for a lot of different stable coins.
Yeah, that's right. The stablecoin narrative is actually pretty strong in the market because they can just take your dollars and then go and earn on it and not give you anything back. They can just pay for a fine if they do anything wrong in the past. But that's it. That's it for Tether. Let's move on. Let's keep it quick. Let's talk about BNB, which is second on the list here. So BNB is the native token of Binance. We all know they have been in a little bit of water at the moment with Binance. The issuer is undergoing massive SEC scrutiny and it's actually being targeted globally. So we've covered BNB and Binance actually extensively in Collective Shift, and we recently changed our rating to being very bearish. You can check it out on the platform over there. So here's a few takeaways from some of our research at Collective Shift here. So there has been worldwide investigations and even a denial of service of Bitcoin. Of Binance, sorry, I said that wrong. There's been a termination of their banking partners. BUSD, which is the stable coin native to the Binance ecosystem, is actually going through a debanking process at the moment. There's speculation over the BNB token with aggressive price support that they're trying to really keep stable. Then there's a focus to top it all off. There's staff exodus and, of course, cuts in the Binance organization. So all of this, wherever you look, there is smoke. The last thing we haven't seen so far is the fire. BNB and Binance still remain one of the largest kind of black swans in the market, though you can argue with me that it's not really a black swan because you see all this black smoke. Will you really be surprised if something does happen to Binance and the BNB token? I'll leave it there, my friends. I think, it's got too many red flags for me at the moment, so I'm staying away. That's not to say you should either, but I'll leave it there for Binance Coin. So, Nick, I think you got the third one there. What's on the third list? I think
the third one is XRP, which if we look back in the historical charts as well, we would have seen XRP be pretty much the main staple alongside Bitcoin in the top 5 cryptocurrencies since, it really came to market. Now, they faced a lot of issues considering its ongoing court case with the SEC, which was filed at the beginning of 2020. We had that big verdict about, initial ruling kind of as a win for XRP. They admitted to, or tried to concede that some of their activities were potentially security-like, but then the big crux of XRP, the courts came out in favor of them. We still wait to hear an appeal though, so this one still remains on its edges. But the big, I think, issue around XRP for me when I'm looking at it is questions about exactly how the XRP token can attain that premium or, it demanded in itself. Because at the end of the day, XRP and Ripple were on the right track of this idea of cross-border payments and value flowing on public blockchains. I think the thing that they potentially missed out on was that stablecoins were this vehicle to exchange that value, and potentially XRP as that intermediary, crypto asset that could, be demanded and have to facilitate all that is kind of unclear to me exactly why you would need XRP then if we have these public blockchains and you can transfer stables easily on them, So XRP at the moment for me is still, hanging around there, but a lot of question marks in terms of how it actually, creates that long-term sustainable value.
Yeah, that's right. Because the XRP ledger itself, the ledgers live separately as well to the Ripple company, which have a whole bunch of XRP. So definitely some flags for me as well there, but we'll keep an eye on it anyway. All right, so let's move on to USDC then. USDC, my friends, is the other stable coin in the top 10. Right? It's quite similar to USD Tether, which is issued by the Tether group. But USDC stablecoin, it's issued by Circle, right? It's domiciled in the US, so it's really heavily regulated in the United States, even though it's roughly 3 times smaller compared to USDT. Now Circle recently launched a new smart contract code base. They called it Perimeter Protocol. There's other things going on with Circle, but this is the most recent news I wanted to let you know about. They have in their eyes, the main idea behind the whole Perimeter Protocol is to really have a foundation for developers to come and build tokenized credit markets. What does that even mean, right? So they have their eyes set on loans, they have their eyes set on bonds and other forms of debt, including government debt, my friends. So that's not the only thing they're working on, but is the most recent. USDC itself has been proliferated across multiple different ecosystems in the marketplace. They're trying to be the heavily regulated, not trying to be, but they are seeming to be the more regulated stablecoin as compared to Tether, as Nick did allude to before. Circle is being a little bit more transparent. They're trying to be a nice player in the market space. So either way, it's still a stablecoin. The price shouldn't appreciate or depreciate. So some people may not be interested in this, but it is still a good hedge if you need to keep your money on chain.
We also
Okay.
got a good one on stablecoins in the last newsletter as well, which, I covered USDC and this sort of stablecoin ecosystem, because as you mentioned, they have had so many announcements, and I'm really expecting USDC to stay in there in the top 10, because they're sort of going to be eyeing, their goal is they want, I think, 1 trillion USDC out there. So they're not going to stop at whatever. They're going to go for that, 100 billion, 200 billion, and I think the sky's the limit for them in terms of how many dollars they want to convert into USDC.
Yeah, and why shouldn't they, Nick? Because they get to then use your money to go and buy those government bonds and earn some interest and do the same thing that Tether's doing. So it sounds like a good play for them. That's what they should be aiming for. It totally makes sense. Let's go on to our next one. What's the next, my friend Nick?
So we got Lido ETH. So this is just stETH. So when you stake via Lido, which is a staking platform that makes it easier for people who don't have 32 ETH to create, or don't want to create their own, validator, their own node. They don't want to deal with all the headache of setting all the technical complexities up. You can just go on a smart contract online. You can just stake your ETH with Lido. In return, you get stETH, which then you can use in different DeFi applications, or perhaps earn extra yield, or do something other, in the crypto ecosystem with it while your ETH is being staked. Now, Lido ETH has been one of the big aggressive movers. There's been a lot of value flowing into Lido. And a big question mark remains whether Lido will be forced to cap how much market share they capture, because there's been a really big issue being raised at the moment about Lido, and they're starting to eclipse what's called 33% of sort of control. And once you reach a certain percentage, it may become easier for Lido themselves to manipulate or sort of do something malicious, possibly, if they do wish. So a lot of centralization concerns possibly with Lido, and it really remains uncertain about whether they're going to cap themselves on how much ETH that is staked in Lido, because at the moment it's approaching 30%, and once it reaches that point, then we may see a lot of hard conversations be had. So no doubt Lido staked ETH would continue to be high, but it's a limit of how big it gets, maybe held up by centralization concerns, or whether they can successfully mitigate that.
Yeah, Nick, and I think Lido ETH itself, they do have a nice market niche that people do really need, because not everyone can stake their own ETH. So they need to have a liquid staking derivative, which is Lido ETH, or maybe Rocket Pool ETH, So they do have a market out there. It just depends on how big they want to actually get. That's what I think. Yeah. So let's move on, my friends. Let's talk about the next one, which I think in the list is Solana. So Solana has been in the news recently. It's been shattered, rocked by the FTX scandal. They've got some good news, though, with partnerships and collaborations, Visa, Spotify, just to name a few. And one thing that's actually getting really popular on the Solana blockchain is the compressed NFTs. It's a brand new framework, which actually making great strides. It's called Drip.house. It's a new protocol on there where artists can literally just drop music, NFTs, they drop artwork for you, or even just collectibles to their fans if you subscribe. And it's all literally free. You just need a Phantom wallet or any Solana wallet. You go in there, you subscribe to your favorite artist, and every day he drops NFTs to you. That's how cheap it is on Solana. Now, let's go on to actually not the consumer side, but actually on the back-end side. Anatoly Yakovenko, the figurehead, as you call him, for Solana, in a Twitter reply to Raoul Pol, he did say that the Fire Dancer client, which is the second client of Solana, which just basically means if Solana goes down, there will be another client that can help it go up. So really, it's going to make this chain much more stable. Anatoly did say it looking like the end of the year, they will be going to the testnet with around 6 more months for it to go live on mainnet. The whole idea is to just make the chain more stable and more reliable and a heck of a lot faster, which means people can even transact a lot faster than already. Solana is probably the number one fastest blockchain so far out there, at least in the mainstream point of view. Now, Nick, what's your experience with Solana? Have you used it at all?
Yeah, I use Solana a bit. What you mentioned about like the NFTs is really interesting use case, because I saw that I think it allows users to create as much as 1 million NFTs for, I think, hundreds of dollars. So really low cost way for NFTs to be distributed on Solana. And as you mentioned, Fire Dancer is the one that we've been looking a lot at Collective Shift extensively, because not only does it increase the security of the network, it builds the robustness, but it also reduces some potential costs if for validators. So that was a big knock on Solana, is that it's costs a lot. It's not as easy to become a validator on because the barriers to entry are so high. Potentially this helps to make it more efficient and lower some of these costs. So a lot to look forward to for Solana, in my opinion. And yeah, it's great to see them bounce back after what was quite a horrific 2022.
Yeah, that's right. And if anyone's interested about any of the research that we're talking about, just go ahead and check it out on the Collective Shift platform. We do have extensive research on all of these tokens. Now, lastly, Nick, I want to touch on DOGE, the last one in the entire top 10. DOGE, it's still alive, my friends. It's a testament to the staying power of memes and the retail crypto economy. Even though its proposed use in X, or formerly known as Twitter, hasn't gained any actual ground recently, hopefuls still remain hopeful because they hope it'll be used or implemented in X later on down the road. Just remember, my friends, tokenomics are important. You really need to have a look at the tokenomics. Check out our tokenomics guide on the Collective Shift platform just to talk about DOGE.
Yeah, there was actually one I think that we missed there. It was CARDANO, which we haven't covered, and that one is another 2017 staple, one that was high in 2020 and currently still sitting around 9th in the total market cap with about, I think it's several billion in market cap. So almost about 10 billion in market cap, which is quite extraordinary. One of the things that I look for in a smart contract platform, or I guess a blockchain, is adoption, those developer activities, applications launching on the network. Even one that I look for is stablecoins. How many stablecoins are on these blockchains? Because that's a sort of a indirect indicator of usage, of demand, to use these DeFi platforms that are on them. What I see with Cardano is kind of the opposite of what I've been seeing on other chains, is that stablecoins have been quite low in being proliferated on those chains. They're not being supported as widely. We're not seeing as many of these applications being built on them, and these sort of transactions that are being conducted on them are still relatively low for what you would think a 2017 chain and something that has a market cap of about 10 billion is would be worth. So a lot of sort of concerning factors through Cardano. They are still trying to build and create their roadmap, but all in all, I still remain probably skeptical or concerned just from what you're seeing on chain through stablecoins, through DeFi, TVL, through transactions, and then through applications building on them. All these indicators for me are sort of have a few flags, and so I'm not really seeing the activity that I would want to see, especially for such a big cryptocurrency.
Yeah, and that's a really great segue, Nick. You did talk about, what are the actual prospects of it and what are you not seeing for it to be a worthwhile of your time in crypto, at least. But that's the end of the top 10, my friends. I wonder, do you have any thoughts on the top 10? Leave it in the comment section below. What's the key takeaway? Why did we even look at doing the top 10? There's some few key heavyweights in the top 10, aren't there? Some of them are serious and some of them are not so much serious at all. I'm talking about UDOGE. Now, I guess the key takeaway, always do your research, my friends, and don't get swayed by the market rankings. You can look at the top 20, even the top 10 in 2020, and they are not the same as they are at the moment. Look for projects with real-world utility, strong fundamentals, and a clear vision for the future. Does DOGE have a clear vision for the future? Remember, in crypto, things move so quick, and today's leader, it might be tomorrow's loser. Just stay informed, stay safe. Check out the free resources in the Collective Shift platform. And Nick, you got anything to add to that?
Yeah, perhaps for next week's podcast, we'll continue the same theme and maybe look at cryptocurrencies that are outside of that top 10 that potentially make that move into the top 10, top 20, top 25. Because as we look back at those historical charts, we see a lot of new cryptocurrencies enter the fold, and those older ones, like we saw, those old Bitcoin forks, start to kind of drift away into irrelevance. So looking forward to that one next week, I reckon.
Awesome. Sounds good. Sounds like a plan. Let's do it next week. If you have any specific ones you want us to look at, leave it in the comment section below. But awesome, Nick. Let's move on. We don't have much time left. Let's look for things that the listeners should be looking forward to. Now, I've just got a small update for you guys. This is about the bankruptcies that are happening in crypto. We know FTX has recently gone bankrupt, of course. Now, the SEC is actually suing the auditors of FTX. They're called Preger Metis. These are the guys that looked at FTX books and said, yeah, no problem, everything's fine. So it's been a major argument, right? Conducting business without maintaining the necessary independence over 100 times. This, and I quote, is the SEC's, quote, as alleged in our complaint, over a period of nearly 3 years, Preger audits, reviews, and exams fell short of these fundamental principles. Our complaint is an important reminder that auditor independence is crucial to investor protection. That's crazy, guys. That means these guys were not doing their job properly. Now, moving on to the 3AC, also a huge bankruptcy, which kind of rocked the crypto world. 3AC founder Su Zhu was actually just apprehended in Singapore airport, Changi airport, while he was trying to leave the country, no less. Now, he's, and I quote, not been in hiding because recently we haven't actually been able to know where he was for a long time. So co-founder as well, Carl Davies, is still in the ether, though. He's looking at 4 months imprisonment so far. Now, just to give you a little bit of context, 3AC was a major hedge fund in the crypto fund space. Their demise led to multiple cascading liquidations, bankruptcies, forcing or at least influencing the crypto market into this giant bear witch. Not to say they're responsible, but they did not help. So let's go on to why this actually matters. Why am I bringing this up? Because I think, guys, we have to look at it from this point of view. These are third-party companies. They're not the native Bitcoin. They're not the native Ethereum blockchains. They continue to function as is. Nothing's wrong with them. They still continue to go. It's just these companies that take your money, take risks, and then unfortunately go bust down the road. So at the end of the day, you have to look at your own portfolio and have a look at these companies to say, is it worthwhile you having exposure? Or is Bitcoin or the native asset a little bit better and a bit cleaner? That's what I want to leave with. Now, Nick, what else are you looking for? Anything underappreciated in the market you thought you should share?
I was going to say also look forward to the Sam Bankman-Fried trial, which is coming out and hitting, I think, by the time this podcast airs on October 3rd. And so I think it's going to take until October 4th until we hear like the first, and now, the first introductions and the kickoff of the trial after the jury process has kicked off. So as you mentioned, this is just going to be another one in a long line of finally these 2022 potentially fraudulent or alleged fraudulent actors in the space being held to account. I know Do Kwon is also being already arrested. So a lot of these names, just, Celsius, CEO has been arrested and is facing trial soon. So a lot of these same people are finally becoming, justice finally looks like it may be held. So one to watch is no doubt mainstream media is going to pick up this trial and will be plastered a lot around, continuing it is one of crypto's darkest days into last year.
Yeah, that's right. And maybe we should look at that next week as well, see what the FTX trial is going in the news, what they're saying of the trial at the moment. Man, something to look at. Awesome, man. So let's look at what else is underappreciated in the market. Anything we should share with the community. What do you think, mate?
My one was underappreciated for MoneyGram, which is one of the oldest or most widely used money currency conversion services out there. Would traditionally be used to send money across borders. They've recently continued their crypto adoption and will plan to launch a non-custodial wallet. So this is another example, I think, of cryptocurrency and blockchain tech really being fundamental to transforming different businesses. An old business with MoneyGram offered a really outdated service, high fees. Now they're sort of seeing the writings on the wall and they've got to really adopt these new services. So really excited to see traditional TradFi money lenders, money groups start to adopt cryptocurrency and blockchain.
Yeah, that's right. And we cover this every single week. These giant companies are still on the outskirts. They're going to be coming in, or they're already in, and they're just still playing around the entire space. So it's good to see that they're still here. Now, the thing I wanted to share as well was, did you know, guys, it's actually less than 200 days now until the next Bitcoin halving. Do you have a plan? Basically, the mining of the Bitcoin block is actually being reduced from 6.25 to 3.12. Now, some people are saying this rivals gold's inflation rate, right? Or the discovery rate on gold. What does that do to the market? It's going to be very interesting to see. The wall is slowly approaching. Every miner who's running will have their mined Bitcoin literally cut in half. Now, what will that do? Some will survive, some will merge, some of them will keep chugging along for the next 4 years. It's an industry shifting moment, really. It's an interesting kind of computer, software, economic dynamic that we get to observe in real time. It's actually quite fascinating to me. And I just wanted to share that with you guys. Do you have a plan for the next Bitcoin halving? Do you mine Bitcoin? Do you like having some Bitcoin now? Are you going to be getting some after the halving? That's it for now. We'll leave it there. So that's a wrap for this week, my friends. If you're looking for more insights, just please make sure you check out the revamped Weekly Shift newsletter. It provides free weekly market insights every Friday, curated by Nick, of course, our head of research as well at Collective Shift. Subscribe at collectiveshift.io/newsletter. It's collectiveshift.io/newsletter. The link is in the description. We will see you next week, my friends. Bye for now.